Hi there, good morning. Thanks for tuning into the trade setup. I'm Niraj Shah. Unfortunately, it's not great news if you are a bull for equity markets this morning. Let's take stock of the situation. First, I want to start off with the virus updates. And I've been doing this for the last couple of days, not to scare people really, but to pose a question that, remember, the markets may not buckle too much under pressure because of the virus cases going up. But would that mean that recovery that everybody was hoping for is not coming smooth, and therefore could that spook the markets a little bit? It may not cause a very deep correction the way it happened in 2020, but it should be kept in mind. So the cases have topped 189.8 million. This is as of yesterday, by the way. The highest COVID deaths in that sense, Indonesia daily COVID deaths have topped Brazil. So much as we thought that in Brazil, the situation is tense, and in India, everybody makes, and it is a concern, of course, the number of cases that happen in India as well. But a lot of other nations are facing the same issue. It's just spreading, and the Delta variant is now spreading. I read the last count across some 111 countries or thereabouts. So it's actually a very worrying sign, not just in India, but it's across the world, maybe more so across the world currently than in India. But the point, and Thailand, for example, has seen rioting, by the way, because people are demanding the resignation of the government because of the way it's been handled. But they have extended curbs amidst the record cases. The point to keep in mind is that for a lot of these countries, they were almost, UK, for example, right? 50,000 cases in the UK. And remember, at some point of time in the trade setup earlier, we had rejoiced the fact that UK had 0 cases on one particular day, 0 new cases. From there, they reached 50,000 cases in a matter of 2 months. So if you feel that India is coming under control and therefore we can let loose, please be careful. That's the limited point I'm making. Anyways, but I think whether this or something else spooking the market, I don't know. But yes, the markets are in a bit of a spot of bother today. So the US markets last week on Friday, because of the intense selling that came in the last 1 hour, actually headed for the first down week in 9 weeks. But the point is, you got to think of this, that we've had 8 straight weeks of gains for the Nasdaq, and now we're starting to see this. So could this extend, and could we have a bit of a corrective move in the market? I think that's the reason why I brought this chart as well. That this is the point to keep in mind. Not that it's the first down week in 9 and therefore it's great. It's only the first week in 9 weeks that we've had a bit of a corrective move. So let's wait and watch. But yeah, because of that or otherwise, and because of the cases and all of that, Asia is under pressure. SGX Nifty is under pressure. Look at this. It's a sea of red there. There's not a glimmer of green out there on almost on any major market, so to say. And the SGX Nifty was down about 200 points about half an hour ago. 209 odd points. I don't know what the status is right now. Should company is 226. So we're certainly seeing a big corrective move on the indices on open today. So that's the one thing that everybody should keep in mind. Now, before we get to the things to watch, just want to take a snapshot of what happened in Friday's trade. Remember, in Thursday's session, we had a negative market break. In Friday, it was even Stevens. A bunch of stocks did really, really well. The question is, could some of those themes come under pressure? And I think you've got to be mindful of that it could happen because of the way the market has started off. So the market break, except for 1 or 2 days, has not been too negative. And therefore, the question is, can on a day when the Nifty is correcting so much, could the mid caps come under pressure? I'll come to that in a bit. First, things to watch. I will start off with specifics, which will impact trade today, and then get to the Nifty chart from Dr. C.K. Narayan's column, as I do every Monday morning. So first, the OPEC Plus deal to boost oil output will boost oil output because Saudi UAE have reached a compromise deal. Now, keep in mind, viewers, the headline is that they will go out and increase the crude oil output. When this deal broke off, people went negative on crude because they believe that this will unravel the OPEC alliance. Now that is not in place, and therefore maybe, just maybe, there could be a bit of a boost to crude prices as well in the near term. So keep that at the back of your mind. But I would reckon that it's negative for ONGC, Oil India, etc. So upstream, remember I always said, in good news they don't react as well. On bad news they react very negatively. So that negative sentiment might continue. Record high prices for pellets, and therefore companies like GPIL, etc. could all be in focus. Sham Metallics could all be in focus. I think both IPO listings today, GR and Cleantech, are expected to see institutional buying post listing. That was the normal parlance. With the market being weak today, I don't quite know, but I still believe that if they don't trade at some abnormal premium on listing, then they could well see some serious institutional buying. So watch out for both of the IPOs today. And the AGR verdict case hearing in the Supreme Court. Now, there are two possibilities, of course, about what could happen. You need to actually read a lot more about this. I can't describe all of it in this thing, but the point that I want to bring you is, one, that you have to read about the AGR verdict listing, but two, I think the whole street is gone into this verdict hearing, very, very optimistic about some being resolution for V as well as Bharti. And the stocks were very active, especially Vodafone Idea. The thing that I want to tell you to keep in mind is that this is the first hearing, not necessarily a verdict could come in. The only thing that you got to keep in mind is that if their plea is accepted, that okay, the Supreme Court is willing to hear the revised calculations of V and Bharti Airtel, maybe the market might perceive even that as a positive. So it's not a decision that I think will come today. In fact, I'm pretty certain a decision can't come today. It's the first hearing. The Supreme Court doesn't do it like this. And the street has gone very bullish into this. So an adverse comment might actually be a big negative for V, for Indus Tower, for Bharti Airtel. So please keep that at the back of your mind. Now, in terms of the trade setup, very quickly, I'm coming a bit late because I just have one chart to show. And that is this chart from Dr. C.K. Narayan's opinion piece on the Bloomberg, on BloombergQuint, wherein if you see this is the futures weekly with volumes. As you can see, there's a consolidation phase for almost 6 to 7 weeks, as you can see at the top of the line. But the volumes have come off quite materially from what they were. So we are consolidating with dropping participation. Usually that may not be perceived as a very good sign. So let's wait and watch. Maybe it merits to take some chips off the table on the Nifty futures if you're trading the index per se. Results today, ACC, HCL Tech, HDFC Life are amongst the main ones. So people will be watching out for those. But I must say, almost all of these will come in post-market hours today. So during the market hours, on the large cap side, not too much to choose from. Therefore, the stocks to monitor today, a few of them. I've already spoken about a few stocks, right? ONGC and Oil India because of the OPEC deal, or Sarda Energy because of the pellet prices, or the telcos because of the AGR verdict. Now, stocks that might react at 9:15 today, HDFC Bank. Well, I do think there could be a bit of a negative reaction because the NI trend was weak and the NPAs have risen marginally. Total slippage is also elevated at 2.5% of the loans. And HDB Financial, which is the subsidiary, the gross NPA doubled quarter on quarter from 3.9% to 7.8%. So all of these are worrying signs. Now, you may worry that all of these, you may say that all of these are manageable and therefore they are great news, which is possible, of course. So Motilal Oswal, for example, is saying that. They are saying that in the near term, the lifting of the RBI restrictions remains the key monitorable. They broadly maintain their earnings estimates and project an 18% PAT CAGR from FY21 to 23 and maintain their buy rating with a target price of 1,800 per share. So they almost see no negative here. I think one more brokerage, CLSA or somebody, or Morgan Stanley is a target price of 2,000. CLSA has maintained their overweight. Bernstein has kept a target price of 1,350. Or if everybody's saying that, the larger bank, which is HDFC Bank, will be able to maintain or manage this issue well, and therefore you don't have to be worried too much. Plus, the valuations are not really sky high compared to previous history. Let's see. I think HDFC Bank could start off slightly negatively. Post that, maybe it could see some buying. So let's wait and watch. Remember, the key monitorable remains that RBI verdict, which the CEO himself said that the ball is in the RBI's court now. Just Dial, Reliance Retail, forget the results. I mean, the results were a dampener, yes. But the big news was this, right? That Reliance Retail will acquire 66.95% in Just Dial for about 5,711 crores, including the open offer cost. The acquisition is done at a price of 1,020 per share. So this is, of course, lower than the existing price. So you may view that as a dampener. You may also view it positively that, hey, Reliance gets into Just Dial and therefore this could be positive. Now, two caveats out here. All the businesses that Reliance has bought in the past, not all of them have really rallied post the deal. In fact, the network rating group stayed stagnant for a long time. A bunch of other things stayed stagnant for a really long time. So you don't quite know. And keep in mind that if you look at the 6-month price of Just Dial, the stock has rallied quite significantly ahead of the deal. And therefore, could there be a corrective move? My bet is on that. Let's tell you what brokerages are saying. So Bob Caps are saying, I mean, I'm not getting the whole thesis out here for you, but Bob Caps is saying that they're raising the stock to a buy from a sell, target price of 1330. But Edelweiss maintains the reduce with the target price of 675, and Nomura on Just Dial has downgraded the stock to a reduce with a target price of 820. So all the three brokerages have diverse views. Look at that. Yeah, let's stick to that plate for a second, please. Look at that. So Nomura has downgraded to a reduce with the target price of 820. Edelweiss 675. Just Bobcats with 1330. So you'll have to take your own bet. The fact that the open offer price, of course, could be lower than the current market price because the stock has rallied. Maybe it could find support there. We don't quite know. I would say also watch out for India Mart, by the way. Would competition heat up there, and would the street believe that now that Reliance is there, could it heat up the, make the space a big, a hot space? But India Mart has inherent strengths of its own, and therefore don't quite know. Be interesting to see what happens to it today. Some other stocks that you got to keep in mind: Tata Power. They've partnered HPCL to provide EV charging stations at HPCL's petrol pumps. So Tata Power makes big foray or proper foray into the EV charging space, and with HPCL and all of the petrol pumps across major cities. So that's one key thing. Jindal Stainless India Ratings and Research has upgraded the long-term credit rating. BHEL has tied up with Swiss Rapid, I presume that's how you pronounce it, to bring the maglev trains to India. There's a specific technology which makes these trains very special, and BHEL has the tie-up now. That could be interesting. Watch out for L&T Finance, weak results, and Mangalam Cement, strong results. So those are the other two that I'll watch out for. And last but not the least, at times we forget secular uptrends or large themes. So therefore, at times it's important to keep on reminding about developments happening there. And it's a very interesting comment from Piyush Goyal at the CAI Summit. He says, and I quote, by 2023-24, and not 2025, India will ensure 20% blending of ethanol. And it says that our ultimate target is also to have vehicles which can take up to 100% ethanol. Now, this is something that Nitin Gadkari has said already. But I'm bringing this up because the timelines for 20% blending, while 2023 is where we unleash it, and the target was earlier 2025, Piyush Goyal says that India will ensure 20% blending by 23-24 across India for all the petrol products. This is a significant statement and just a reiteration of the fact that there are some mega themes that you've got to keep in mind and got to keep on considering valuations at every down day. Could today be the day, or could the next few days be the days? That's the question that you are best placed to answer. So lots of stocks to monitor today, but the markets will start off lower. So keep that at the back of your mind. Stay safe, trade safe, and if you're stepping out, please stay masked up. Thanks so much for tuning in today.